Welcome to the On the Tape podcast. Guy Adami, I'm always joined by Kaitlin Malin. She is the COO of iConnections. She is a dear friend. She is brilliant. Today, we have Jim Shannon, founding partner and CEO of Indus Capital. Jim, how are you?
I'm doing well. Thanks so much for having me today.
No, you kidding. It's great to have you. And Kaitlin, always great to be joined by you. So, Jim, let's get into it. And I always like to start these things with an introduction. Like, tell our audience a little bit about you. I think people always enjoy hearing sort of the story, and then we'll get into sort of the nuts and bolts of things.
Great. All right. Thank you, Guy. I am the current Chief Executive Officer at Indus Capital. As you mentioned, I'm a founding partner. I am a trader by skill set. And when we founded Soros in the summer of 2000, I actually left Soros. We left as a team, 7 of us, left Soros Fund Management to start Indus. We focus on Japan and Asia. And before Soros, I worked at GE Investments. And before then, I worked at Chase Bank. And then also, I'll test your history. I worked for Wagner Stott.
Yeah, absolutely. Wagner Stott, without question. I will tell you, a specialist firm, I think they were the last one to be bought. You guys top-ticked it, if I'm not mistaken. It was Bear Stearns, if I'm correct. And then after that, it was straight downhill. And Michael LeBranch held out after the Wagner Stott. And he, at one point, I think, on paper, was probably a billionaire. And obviously that vaporized.
So I can actually do you one better. Donald Stott top-ticked it twice. He actually sold his clearing business to Merrill, I believe either right before or right after the 87 crash. And then he sold the specialist business. So he literally top-ticked exiting clearing, selling it to Merrill, which became Merrill's prime brokerage business. And then he top-ticked by getting out of the specialist business. Unfortunately, he passed away. And there's some great stories about him. He was a great Burgundy wine collector, great fisherman, a great specialist. And I was a summer, I wouldn't even say intern. I had a summer job there. My father ran the margin department, and I met guys then that I traded with later in my career, met people I'm still friends with today.
Well, we'll talk about that offline because that's fascinating. And I'm curious as your thoughts about Japan and what's going on there without question. But, you know, before Kaitlin jumps in, 30,000-foot overview of what's going on. We're doing this so people understand. I think it's important for context. We're doing it on the Wednesday that CPI came out. We're sort of in between Jerome Powell's presser and the Q&A, so a lot can still happen. But with all that said, you know, how do you view the world right now?
Great question, and actually a great week to be here. And when we set this date, I was thrilled to be here. We also have the Bank of Japan coming up. So CPI today, Fed today, Bank of Japan. We see the yen rallying right now. We know more than anything, the yen story, and I know you talk a lot about it on your podcast, the yen is a dollar story right now. It's an interest rate story. In saying that, we're seeing things after a 34-year bear market in Japan that we've never seen in our career. We've seen companies willing to engage from a management perspective. They're being told actually by the exchange and by the regulator to do so. We're seeing capital being returned to investors in the share of in increased dividends and also share buybacks. And then the last thing, and this is really key, Japan forever has had cross shareholdings within other companies. So you and I do business, you own X percent of my company, I own Y percent of your company. The government, starting with the insurance industry, the FSA in Japan, the regulatory body over the insurance industry, is saying no more of this. You need to sell these cross shareholdings. And what we see is a virtuous cycle. We see companies that did not have good governance, to be honest, that were buried on the balance sheets of other companies. We see them now being unleashed to also, hopefully, have better corporate governance. But then more importantly, let's see what those companies do with the cash that they raise by unwinding these shares. I think that they'll focus on better return on invested capital, and hopefully they'll return some cash to shareholders.
That's great. I know we're going to dive into all of that, but before we do, why don't you just take a step back, Jim, and give us a sense for how your firm is structured and the types of strategies that you invest in?
Sure, great question. So one thing that I always say about Indus is our DNA is from long-short equity investing and boots on the ground. When I joined Soros, we had an office in Hong Kong, and that office was led by Sheldon Kasowitz, one of our founding partners, but also by Rodney Jones, who was also a partner at Soros, who started his own macro consultancy when we all left. The core of that office was also Ben DeSoma, another Georgetown guy, who's now our head of research, and he's back in the States in San Francisco. After a couple years at Soros, our team took over Tokyo. Obviously, Soros had always invested in Japan, but it was a different team. I did some trading for that team, but our core team then took over Japan investing. So when we launched Indus, we launched with Japan long short and Pan Asia long short. As the years went on, there was a lot of twists and turns at Indus, but if I fast forward today, we are solely focused on Asia, solely focused on the equity markets, both long, short, and long only. And that core DNA of long, short, bottom-up stock picking is really defines our research process. The other thing that I'm quite proud of is our team. We've been together for so many years, and even the new people on the analyst side are here for 15 years. Of course, we have a couple new people, but again, the average analyst at Indus probably has 20 years experience and maybe as many as 15 or more years with the firm. In terms of our products, as I mentioned, we do have Japan, long, short, and long only, Pan Asia, once again, long, short, and long only, and 3 portfolio managers who all sit here in the States. In the States, we have San Francisco and New York. And again, as I mentioned, we have Hong Kong and Tokyo as our research hubs.
Yeah, no, that's the hearing. I wanted to ask you a bit more about your team because I think a big part of your strategy and your focus requires you to have regional specialists. And, we were just talking earlier about your mentors and others. How have you thought about, as the CEO and founder, building out the team, finding the right talent and keeping them to really build out a solid strategy?
It's a great question. I think everyone at Indus knows I talk just about succession planning all the time. We did go through our first round of that where I didn't mention David Kowitz, but David Kowitz was actually the guy who hired me at Soros. David ran the Asia Pacific Fund. Sheldon ran the Japan Fund. Over the course of 15, 16 years of Indus's history, not only did they run the funds, they also ran the firm as co-managing partners. Over time, David first stepped away from managing money and then from managing the firm. And then Sheldon Kasowitz did the same at the end of 2019. So all the 3 fund managers now were actually handpicked by David and Sheldon as analysts on their team. And they got promoted from within and now run all the money and control, I shouldn't say control, but own a majority of the capital of the firm. We are fully privately owned. We have no outside investors. And I didn't mention we have about $3.6 billion of client AUM.
And we're going to weave in and out of that, but I'm going to go to my markets side of this equation. And, let's talk about Japan first. And obviously, it's interesting. The markets there were doing really well. Then Warren Buffett announced that he had large stakes in some of the financial services, right? I mean, you can speak more intelligently than I. And I think that gave the Japan trade sort of the next leg higher and doing extraordinarily well. One thing I've said for a while, I mean, Japan is a great experiment in terms of economic policy, fiscal policy, and different things. And I think right before our very eyes, and feel free to push back, but, dollar yen trading up to 160 was definitely a warning sign. Bank of Japan intervenes. They intervene again. They get it down to 152. Trades back up to 157, and here we are today on the back of, again, I guess a cooler CPI, U.S. dollar sort of falling out of bed a little bit, so the yen is strengthening. However, it's happening at a time when we're seeing interest rates in Japan at levels we haven't seen in probably 14 or 15 years. So you have a yen weakening until today, and you have interest rates going higher. It doesn't sound like a particularly healthy brew for investing or Japan in general, and maybe vis-a-vis what it potentially could mean to our bond market here or our equity market here. Thoughts on that?
So great question. And I think you are right to point to how the markets are more interrelated than ever. Even one of our traders pointed out how the Mexican election affected the yen about a week and a half ago. To try to go in order of your questions, first things first, in Japan, and I think with the yen particularly, I'll admit this is an experiment. This is uncharted territory. However, I'm going to give them a little bit more credit than I think most market participants do. And the reason I say that, if you think about this, forgetting current account, forgetting about why governments own or carry surplus of foreign currencies, if I just told you that someone was buying dollars at 80 and selling them at 160, you'd say pretty good trade. And the other thing about that even I needed to read a note by the Council of Foreign Relations to remind myself, like, hey, that's a pretty good trade. And not only is it a profitable trade, it also gives them more firepower when and if needed. So Although as traders, we always want to say intervention never works. I've actually lived through intervention working in Hong Kong. In 1998, when we had the Asian financial crisis, Thailand fell, Indonesia fell, but Hong Kong held in. So again, I'm not saying, and we had battle scars over that. We survived it, but we had battle scars. We were at Soros at the time. But I think in this case, and again, it's not too far down to conspiracy theory, the U.S. is such an important partner with Japan right now, more so than ever, right? Literally more so than ever. And I believe that strategically, the yen being stable, I'm not going to pick a level, but the yen being stable is equally important to the U.S. and Japan in markets, and then also in stability in Asia.
I completely agree with that. I don't know what the level either is. It appears as though sort of the 160 level is their line in the sand. Again, it seems that way. With that said, in order to defend their currency, they have the powder, to your point, to do that. At a certain point, they run out, and then one has to wonder whether they need to sell in order to continue to do it. And one of those things, I believe, are U.S. Treasuries. And again, not to suggest that our bond market has collapsed. That's what I'm saying. But the incremental buyer, who historically has been Japan, is probably now an incremental seller. So what is that? So one of the reasons that I've thought sometimes correctly, today incorrectly, that yields were going higher, it's a supply-demand thing. And it's basically, who is again going to be the incremental buyer, and at what interest rate is the market going to demand to buy our debt? So thoughts on that?
So, and again, this is a great conversation. One thing that I did learn, because early in my career, I also traded money markets for about 2 years, and we're living through it. Whatever our Fed does, you just add for longer, right? So, and now we're in this high for long, and again, I'm not here to quote other, Paulo's not a competitor, but he made a pretty bold call to say no cuts this year, right? Again, I think people will debate in the States, and I personally think there'll be a couple of cuts here in the States. In saying that, I think to bring it back to Japan, you have to flip your hat for a moment. And I was actually at an event this morning. There's an organization called Fin City Tokyo, where it's the government, it's the stock exchange, and it's market participants. And they've done a good job since 2022 of kind of telling the Japan story. The thing I said at that meeting today, we all have to remember Japan has been in a deflationary and a disinflation cycle for 34 years. We don't know what that feels like, right? Think about that. Like, companies go to the market way too early because they're in a deflationary mindset. Just think about investors, forget about Indus for a moment. Global investors have beat the market by being underweight Japan. Mm-hmm. You could start your year and just say, I'm going to underweight Japan, and you already have a head start in the market. So changing from that and going back to like Buffett, that example, he actually bought into the trading companies in major size, which he's done before. That was a flip. That was like, we're in an inflationary. Japan needs inflation, and we're starting to see it in wage inflation. Unfortunately, historically, and you point to a weak yen, that gives you an imported goods inflation, which is not healthy for the economy. That's the spiral that we don't want to see. What we do want to see, what the virtuous cycle is, wage inflation, which is finally coming through in the sense of real wages. And then the second part of that is services inflation, because then people get their animal spirits. The other thing that the government has done, and it's not so subtle, is they've come up with a NISA system, which is similar to our 401k in simple terms. What did people do? They did what everyone else did. They ran out and bought NVIDIA with the money. Now they're actually, and again, I can't quote the exact date of turn, but now they're actually investing more money in domestic equity funds than they are in foreign funds. So I think that people that sit in the Western world, when we think of Japan, we think of our model. We don't know what it's like to have disinflation and deflation for 34 years. And that's a big change.
Yeah, I'm glad you picked up on that relative to how we look at the market. Talking about inflation, what is the sentiment that you're seeing in Japan around housing, different sector type trends, consumer trends, and how does that impact how the Bank of Japan is thinking of things as well?
So a couple things there. Now, when we talk about the work that we do and then the work that we see in the market, one thing I would tell you is the financials are the outperformers right now. It's kind of the core 30. I think the core 30 beats the overall topics by about 6% so far year to date. But if we look at financials, I think we see a couple things there. One, interest rate cycles and how each bank is positioned to, turn a profit in a rising interest rate environment. But I think the second part, and this is back to the regulator, the regulator telling the insurance companies that we need you to, again, sell out your cross shareholdings. These are the drivers. So we love a lot of consumer type names in the market. The market's not caught up to rewarding those types of names yet. The market's rewarding, like I said before, the core 30 and the financials. So very short-term focused. I think if we go 3, 5, 10 years out, those consumer names are great opportunities.
I know you know this, but I'll bring it up to the audience. Indulge me for a second. Japan's declining birth rate by the numbers. Last year, total births a little over 700,000. Total deaths a little north of 1.5 million. The fertility rate's a record low 1.2. The median age is slightly less than 50, 49 and a half, which is the highest in the world. 1/3 of their budget, the national budget, $250 billion, has been set aside for Social Security this year. So what does that mean to me? It means they have a demographics problem, and that might put a tremendous headwind, in my opinion, to all the things that you just talked about in terms of investing opportunities. So how do you reconcile that?
Great point, and I think a few things there. So first of all, I think other than the continent of Africa, everybody has a demographic problem right now. That's part one. Part two is there's only really a couple ways to fix that. One is immigration, which Japan historically has been slow. They are addressing that. I don't want to misquote it, but the number of foreign workers is at an all-time high right now. Again, I don't want to misquote the numbers. The other part is tax reform. They need to fix that. So these niche accounts that I just referenced, if you or I, people our age, have them, I'm not sure how the inheritance tax is not set up in such a way to encourage us to save and invest more money. So they need to work on immigration and they need to work on tax reform.
How are you looking for signs of change there where you can start to feel like you're seeing positive momentum, in the near term? What does the timeline look like for those types of changes?
I'll start with the market and then I'll start with the greater economy. I think with the market, what do we always look for? We look for rotation to tell us that a rally has legs. Unfortunately, that's not the way the world works right now, right? So my view, and again, I always like to qualify. I didn't qualify this yet. I do not manage money and I don't trade anymore. So I'm overhead. And, again, I'm.
But you have views, though.
No, I have a view and I share my view and I'm on all the portfolio manager calls, et cetera. And, I view myself as a market participant. I think that just like the Magnificent Seven or the Magnificent Five or the Magnificent One, that style of investing is being exported around the world. So as much as someone like me would like to see a rotation away from the core 30 in Japan, I have to kind of hold some amount of risk that it will stay concentrated. So that's a fear. But in saying that, let's watch it. Let's see how it plays out. And I think there's still an ability to be a stock picker. I think in terms of the demographics, we need to hear from the government. We need action by the government. I think one thing that's encouraging, we are seeing the action through the financial market regulators, and this is coming straight from the top, straight from the prime minister. Now, again, as we've seen around the world, there is political instability. We don't have to talk about the elections over the weekend. I know we mentioned Mexico. We didn't mention India yet. There could be a new prime minister in Japan in the near future as well. I think we need real government reform. And I know we don't like to bet or wait or hope or pray about government reform, but I think we need to see it. And I think Japan is on the right track.
Let's segue to China because it's a completely different kettle of fish. I mean, in terms of investment opportunities, there have been some trading opportunities, but it's been very difficult for a prolonged period of time. They have their own issues, which we talk about all the time. The one thing that concerns me, and again, for whatever reason, the market does not seem to care whatsoever, is the continued ratcheting up of the rhetoric from China towards Taiwan, which I think is I don't want to use existential because that's a little hyperbolic, but for lack of a better word, I do think it's a bit of an existential risk for the market that nobody's paying any attention to. So am I too concerned? What are your thoughts about the whole China situation now?
So one, I think you should be concerned. I think all market participants should be concerned. But on the other side, I think that's a risk we should be willing to take. I think for a few reasons. One, there is a great balance of power between Japan, South Korea, and the U.S. that, again, same thing. This is unprecedented. Rahm Emanuel is now our ambassador to Japan, and I think I saw him in New York about 6-8 months ago. I think one of his proudest accomplishments is that tri-party agreement. So I think in terms of, and again, I'm not a military strategist, but I've read some work and I've been to some presentations. I think that we can look at the market and we can say it's a risk we want to take, but in reality, what's happening? And Taiwan is offshoring as well. They've built fabs in Japan. They're building one here. And I think that the chip wars, to use that phrase in the title of the book, if you read it yet, if you enjoy it, that is for real right now. So I think Taiwan has performed well. I think TSM in the States here has made an all-time high. Yeah, that's been a great stock and a great company, I should say. And again, like I said earlier, they've been offshoring from Taiwan in the risk that someday Taiwan does get reunified with China.
We obviously have close eyes on the U.S. election coming up. Does that play a role in how you're looking at the chip war as well and swaying in one direction versus the other?
Yeah, so two things on that one. And again, these are all great questions. And I think, look, when we started this year, we knew the percentage of the free world and the number of elections that were going to be in play. And we know how this one's playing out, or how it looks at least to be playing out. I think one thing that an investor can feel good about is trying to be strong against China. Looks like that's the one bipartisan thing that everyone agrees upon. And some of the people that we've spoken with who have been in government feel pretty good about the teams that are in place in Congress and what the policy will be. And that's regardless of who gets into office. So I feel, again, I don't want to get into politics,
No.
But the punchline is this. I feel like of all the markets and all the risks and all of the rhetoric related to this election, I feel like at least China, we can be pretty consistent on both sides of the aisle.
No, I think it's fair, and politics bore the shit out of me too. But however, every once in a while they find their way into our world, right? So, I mean, this is just me reading the tea leaves, and it's not political, but I think a Donald Trump reelection, a Trump administration, to me, would be extraordinarily inflationary in terms of the relationship with China and some of those things. Other people have pushed back and say, maybe on the margins a little bit. We had Steve Eisman on here a couple of weeks ago that didn't think it was a big deal. Again, I'm probably making too much of it. Am I making too much of it?
So I'll use one example would be like EVs. So EVs, what does China want to do? China wants to be deflationary, right? They want to flood EVs. But we just saw in Europe where they're putting tariffs in place, and I think we'll put tariffs in place. So as much as I think, and I agree with you that Trump, because of a lot of things, he likes low-rate people, as he once said, right? So I think he will be inflationary, but I'm not sure that it will be driven out of his China policy.
We've talked about China. We've talked about Japan. What other strategies or areas within Asia are you looking for investment opportunities, things that people might not have on their radar?
Yeah, so I think one thing we didn't really get too deep in when we talked about Japan was, how the government is encouraging companies to help unleash their balance sheets, basically, and value up, as the saying goes. Korea is also going through a similar transformation. And believe it or not, China is trying it as well. So I don't want to discount that China can't put measures in place to help prop up their market. But I think in Korea, another place where you have world-class companies, again, a lot of household names, the market has been very retail-driven, and this has been a phenomenon I think that's hurt the Korean market. And I didn't attend the event, but many of my colleagues at Indus did. But similar to Japan, Korea had a Korea Day here a week ago where they had the exchange. They had some high levels of their finance office and government, and obviously the banks and the brokers. So I think Korea is a place that's interesting. We didn't talk about India.
I was just going to say, and let me just say, it's fascinating to me that we've seen these elections. I mean, you think about the election in Mexico and the subsequent move it had in their currency and their markets, right? India as well. I mean, historically, it's happened before, but seemingly more so now than ever, the impact of elections on economies. And that's why I was sort of dancing around, potential another Trump administration. Anyway, please, because I'm fascinated about India.
Yeah, so I think with India, a few things. One, I would say the measures that have been in place since Modi's been in office have really helped the market, right? That's a fact. I think that the demographics in India work. I know I mentioned Africa earlier, but the demographics still work in India as well. And I also think that what historically were the types of companies that outperformed the market in India, we've seen that broaden out. So to your earlier question about in Japan, what have we seen, what kind of sectors? I think India is another place where you've actually seen the rally broaden out. Again, internationals have participated in size, but also the domestic investors kind of taken the bait and invested in the market. One thing, and it's remained to be seen, and again, that's another weak currency market. One thing that we'll see is, does a divided government actually help the economy, which historically it has, right, globally? We'll find out how that plays out in India. The thing I will say, I was shocked around the trading around the investment. And that tells me from my view that there was hot money in and out of that market. Again, not so much in the currency, but in the stocks. And I was really surprised with those kind of 3 days around the election.
Well, yeah, I mean, we talked about it on our show. I mean, the INDA, which is something, I mean, for lack of, it's the India ETF,
Yes.
right? And this has been lower left, upper right, to your point, for quite some time, until the beginning of June, when it went from like 55 down to 51 in a straight line, which doesn't sound like a big deal. But in this ETF, it actually was a little bit of a big deal. Right, by the way, it's right back up to prior all-time highs. So it sort of shrugged that off, which many things are. See, that's what I also find fascinating. Mexico's going to probably shrug that move to the downside. India already has. So my next question to you is, what won't the market shrug off? Like, what are you concerned about?
So it's a great question. If you look at my Bloomberg header, I have the 210 spread, and it's been on there.
Oh, don't even, please. It's the longest, I think from 1970 to 1980 or right around, that was the longest inversion in the history since we started keeping track. In March of this year, we surpassed that. And now obviously here we are in June. I think we got down to 13 basis points or so inversion, right back up to 45. And wherever we are today doesn't matter. But nobody seems to be talking. Why isn't anybody talking about that? You obviously want to talk about it. Thank you. But the market, again, doesn't seem to care.
So I'll take a couple of swings at that, and one, I'll go back to, in quotes, the regional banking crisis from last year. That lasted for what, 72 hours?
Yeah, I was going to say about a week.
Yeah. So my point is this, and it's not an Indus view. This is a view of an old trader and a guy who used to look at the markets all the time. I think we kind of hold our breath. We're in a market. There is a FOMO, to use that overused phrase. There's a FOMO market out there. The thing, I did a speech in April of last year, and along with the For Longer and along with the NVIDIA, not that I was picking NVIDIA, I don't want to make believe I picked it, but what I did say at the time was, that is a stock that every time it's below its 50-day moving average, you buy it and you get rewarded, right? If you go back and look now, it's still the case. So my point there is, we are in the risk business. And I do feel that this is telling us there's still too much money in the system. And you could pick housing, you could pick stocks, you could pick the concentration of stocks. When this unravels, I'm not going to try to predict that, because anyone who's tried has been wrong and carried out. But I think, to your point, it is coming. How it plays out, I'm not sure. But I think every time something like, in quotes, the regional bank crisis happens and the Fed bails us out, the market takes on more risk. And I think we're stuck in that cycle right now.
Well, I certainly have not been following the inverted yield curve or yield curves in general as long as the two of you have. But one of my favorite questions when we do have folks on here to ask is, what are you finding yourself relating back to in your career, whether it's a specific point in markets? I mean, you alluded to it a bit with regional banks, but do you find yourself drawing back on certain things that you experienced as you look ahead to what you're seeing for an Indus and in markets in general?
I think a few things, and again, some of my colleagues are better to give you the precise historical kind of comparison. But one theme that I do, and I've really dug in on, is, Japan and China today. Are we seeing the things in China, not just in the last 6 weeks or 6 months, but really in the last 2 years, that we started to see in Japan when that bubble burst and that market was kind of a post-industrial market for all those times? Now, again, I have some people that we work with at Indus and some people who advise us at Indus, and they're saying below the surface, things are a lot worse. If you think about it, about a month ago, the middle of May, the government, I'll just say Beijing announced measures to prop up the housing market. This week, we had a follow-on, after the market kind of rolled over, to Guy's point, we had another one of those false starts. If you go back and look at the CSI 300 index to, I believe it was Feb of 21, where we had the peak, we've had nothing but lower lows, and we've had maybe 11 or 12 now false starts. Everybody wants that market to rally, but I still think many allocators are overinvested. I think many of them are trapped in privates. And I also think that under the surface, as our people that have been on the ground have seen, things are worse. There is good lip service. However, there's nonprofit making companies are losing more money now than they have been losing. So things on the ground don't match the optimism or even the desire for there to be a rally in the market. So that's one thing I'm trying to say, and I think we as a team are, what are we seeing in China that we've seen in Japan before? And then I think in Japan, we're saying, what are the things we've seen in the States? Again, I don't want to misquote the year incorrectly, but, if you go back to, when Paul Volcker was in the seat, how many years, I think from 74 to the early 80s, the Dow back then was flat, right? So what was it that turned it around? What were the good things about the market? Obviously, there were interest rate cuts back then that helped the market a lot. But what were the regulatory changes? Again, there was a lot of regulatory changes, but what were the positive ones that helped unleash the balance sheets and allow the animal spirits to come back in the market? So I think that's a good comparison. So what are we seeing in Japan today, and what's the corollary to what we saw in the U.S. That fed some of those bull markets that we've lived through?
Yeah, I'm glad you touched on asset allocation more broadly. iConnections, we think a lot about LP portfolios and how they're thinking about allocating to new fund strategies. We host an event in Singapore that's this November. So what have you observed, taking your CEO hat, what have you observed in terms of investor conversations and how LPs based in Asia broadly are thinking about shifting their portfolios?
Yeah, so we've had more interest in Japan for the last year and a half than we've had in a decade, maybe even longer, because everyone wants to figure it out. No one wants to miss it.
Right.
A real skeptic might say, well, it's an easy trade. The yen's weak and stocks are up. That trade has worked for some, but we also have proof that in years of strong yen, you can make money in the market as well. So I think people want to understand it. It is still one of the largest economies in the world. It's still a big weighting in the global benchmarks. Again, not what it was 20, 30 years ago, but it's still an important enough market that it's too big to miss. So I think people want to understand it. And then back to what I said earlier, they want to understand how much of it is beta versus alpha. And at Indus, over time, again, my compliance officer isn't with me, but we can't guarantee the future, but over time, we have been able to extract alpha in the markets. And I think that's when we engage with LPs and prospects, that's what we want to talk about, how our process can help untap some of that alpha.
There's some fascinating places in Asia that nobody talks about. Vietnam, Singapore. I mean, we can rattle off a bunch. Korea, South Korea, obviously. But anything sticking out to you in terms of the Asia trade that nobody really talks about?
Yeah, I think all those markets, Indonesia kind of comes and goes, and Indonesia could be interesting right now. You mentioned Vietnam. I went to Vietnam for the first time about 15, 16 years ago. That's an interesting market in terms of the structure of how stocks actually become public companies and how they trade there. And then obviously the offshoring from China, Vietnam, could be a big winner. The market's still not efficient enough for people like us and our LPs, but we have had a few names in Vietnam that we've invested in over the years, but it's still not a fully developed market enough for us. But there is great opportunity there. And then I mentioned India earlier. I know a lot of people talk about it, but I think so many people have been burned trying to invest in India, trying to time it, picking the wrong partners. That India is still a market that I still think over time people will be rewarded for getting it right.
Fascinating conversation. So how are people finding Indus Capital? Tell the folks out there listening where they can find you, how to reach out, those types of things.
Sure, absolutely. So we do have a website. Again, from our history, from the Soros days, you didn't want a lot of publicity back then. So we did fly below the radar for many years. I think the other thing about Indus, we now have a great team of client advisory group. And again, I know you know them all from the conferences, but so you can find Indus on our website, induscap.com. I don't know if we can, throw out my name and email up there, but of course anyone can email me.
Put it in the show notes. Yep.
And then we'll make sure that the iConnection crowd is aware and can find us as well. And I just heard from my teammate that iConnections had a big announcement. I don't know if you announced it in Boston, but you have a new partnership. So I'm sure you're excited about that. So help us get our name out there. And like I said before, our job is to align with LPs who really want to understand Asia for the long term, and that's what we're here for.
Well, you're doing a great job. That was a fascinating conversation, Jim, and continued success. Thanks for joining us.
Thanks so much for having me.